Were high yield investments a bad investment this past year? Were these ETFs bad? Did they outperform the Qs? Let's look at it and see, at least from the four main holdings I've held through the majority of the year, and see where we would end up. Would we end up beating the Qs, being behind? And I think that's an important benchmark. I think it's important to look back on your whole high yield account and see if you beat the market. And in this case, we're going to use the Qs because the Qs outperform SPY. And SPY is typically the benchmark people use to see if their account outperformed the market. But because the Qs outperform SPY, we're going to use the Qs. This is Mike, the tactical stock scalper. All right. Please let me know if your account as a whole outperformed the Qs. We were told at the beginning of this year and throughout, half the year at least, until the bull run really took off, and then you really haven't heard much about it, that these funds were horrible. High yield funds were yield traps. We were going to lose all our money. They were, losing NAV erosion, all of this stuff. And if you'd have listened to that, you wouldn't have had these total returns. Thankfully, I didn't listen to that. So let me get into this here. And we're going to talk total return here because total return is the ultimate truth serum. Whether people like that or not, if you're an investor, not a trader, two different things here. If you're an investor and a long-term holder, total return is a key metric and one, that I look at anyway to determine if things are good. So I want to talk about four positions I've held for the majority of the year. And if you've held them all year long, equally weighted, where would you be at? So let's start here. SQY. Now, my account's different. My total return is actually higher than what I'm going to share here, but it's because my account's structured a little different. SQY is my lowest position by far. It only comes from trading profits. That's the only way SQY has been funded. No money out of pocket. And the beautiful thing about that is SQY has performed so well, so I put my trading profits in there. SQY continues to perform at a high level, so putting extra dividends and share price appreciation on top of free money to begin with is just more free money. But I digress. SQY is my lightest position by far. SQY this year returned 30%. The Q's total return was 28%. So if you just held SQY by itself all year long, your total return is 30%. The Q's is 28%. Pretty freaking phenomenal for a yield trap. I must say, I don't know. Total return is total return, whatever that means to you. My next position, largest position, is AMSI. Now, AMSI has triple the amount of shares of SQY because I funded AMSI out of pocket. AMSI returned a total of 38% this year. Okay? And the Qs returned 28%. So if you just held AMSI, you were beating the market, or the Qs in this case, by 10%. Pretty fantastic stuff. Next is NVIDIA. Now check this out. NVIDIA, I have doubled the amount of NVIDIA that I do of AMSI and triple the amount of AMSI that I do of SQY. NVIDIA returned 116% this year. And the Qs in total return, and the Qs did 28%. 116 to 28%. Now I know there's a lot of individual stocks that beat the market, but we're talking the account as a whole, right? So we have to include that into the equation. But still, NVIDIA 116%, and the Q's 28% in total return. Next is YMAG. YMAG is my largest position. NVIDIA is just a hair behind it, okay? But YMAG and NVIDIA are pretty much neck and neck, and YMAG returned a total of 34%. this year. Again, the Qs did 28%. So YMAG also out. If you just had YMAG, you would have 34% and the Qs returned 28% in total return. That's pretty phenomenal. Now let's do this little experiment here, okay? If you had SQY, YMAG, NVIDIA, AMZ, like I've had for the bulk of the year, and they were all equally weighted, which mine are not, right? I have more NVIDIA than I do AMZ. I have more AMZ than I do SQY. I have more YMAG than all of them, right? But they're stair-step down like that. YMAG is my biggest position. SQY by far the lowest. But let's just say they were all equally weighted. That's a return of 54% average out. And the Qs returned 28%. That's not a bad account at all for a yield trap, for trash, for funds of people. Hey, I mean, the total return is a total return. I don't know what to tell you. But if you did that and you had these four funds, they returned 54%. The Qs returned 28%. Now this year, I also had Phoebe for a number of months. It was great. But Phoebe got so much above my cost basis. And all the dividends I received while holding Phoebe, I had to sell that thing. It was just up too much. It made me nervous holding it because it was up so much and I didn't want to lose it. So I sold Phoebe for profits this year and put that in NVIDIA and YMAG. Now, I also did hold Tesla this year for a few months. Not very long, but I did hold it for a little bit. And I got lucky, personally, me with Tesla. Tesla was coming down to the $200 level. I was hoping it would bounce from that level. So I did something risky. I went in with a ton of shares on Tesla to get my average cost right, basically even with the $200 level on Tesla. Meaning when Tesla would bounce from 200, so would Tesla, and my average price would go up from there. I put a stop loss really tight under my average share price of Tesla. I just got lucky. It bounced off 200 as support. It went up to like 215, 220, and I sold that Tesla for profits and got out by the hair of my chinny chin chin. Funny thing is, after the course of the year, Tesla is up in total returns. But I didn't know. The thing was dumping like crazy, and I shouldn't have got in Tesla anyway because I don't know nothing about Tesla. So I shouldn't have done it, but I did. Got out with profits. Got lucky. Okay. Next, I own QQQY and IWMY for quite some time throughout the year. QQQY returned 9% this whole year versus 28% of the Qs. Again, total return was positive on QQQY. So I sold out of that. I just didn't like the direction Defiance took with it. I got out with profits. Wasn't a ton, but because the dividends outpaced the share price decline of QQQY and IWMY. So that's just the way it worked out. People, I bought on dips on the underlying chart, got my average cost lower. And the funny thing about QQQY and IWMY, the chart looks like this, right? But what really happens is it comes down, and because the Qs and IWM or the Russell ripped up this year, it would go up. Then a dividend drop would occur. It would go down, right? After the dividend drop, then it'd go up a little bit more. Dividend drop. So you were always catching something positive, even though the chart looked like this. It would more look like this. And the dividends outpaced the share price decline. So got out of that with profit, not a ton. And then I held Yieldmax this year, which coincidentally hasn't outperformed the Qs. It's one of the few that I've held that, well, QQY did outperform the Qs, neither did IWMY. But Yieldmax did not also outperform the Qs. But in total, this year, or this past year, my high yield account returned 63%. That's pretty freaking phenomenal. And the Qs returned 28%. I don't know what to tell you, but I think that's a great return for high yield funds. What's going to happen next year or this year? I have no idea. I'll find out at the end of the year. But what I did notice, when these ETFs would go down and their underlyings would go down, they outperformed their underlyings as they went down. So as a whole, if the market goes down this year, I'm pretty sure these 4 holdings I have and will continue to hold because I'm very satisfied with them. I haven't changed them now for months because I liked them so much that it would still, I think, outperform the Qs as a whole, even if we have a down year, because you get the buffer from the cover call fund, which they outperform their underlying on the way down. Pretty confident with them, feeling really good, but we'll have to wait till the end of the year to see how they did versus the Qs. Hope you enjoy the content. This is Mike, Tactical Stock Scalper, out.